Hi, I'm Linda Eedes. This is an update on the RECM Global Fund, looking specifically at the fourth quarter of last year, talking about 2019 as a whole, and then looking, of course, at how the fund is currently positioned, some of the changes in the fund over the quarter, contributors and detractors to returns, and then, of course, the strategy going forwards. So 2019 was a spectacular year for investors across the board, not only in the developed markets such as the US, Europe, UK, but also across emerging markets in terms of equities. But not only in the equity space, you saw bonds doing well as a result of declining yields, and you even saw gold prices rallying. Gold price was up almost 20% last year, and that of course saw a lot of gold stocks rallying, some of which we have exposure to, but also gold price, which is interesting because usually the gold price is sort of inversely correlated to a lot of risk assets, and a lot of investors have it as a hedge against macro geopolitical risk. So the fact that all of these things converged was quite nice for investors, but at the same time, it does make for some concern as to where to from here. So interestingly, the US market was very much driven by growth stocks once again, in particular the top 5 stocks in the S&P 500, notably the big tech stocks. So that includes Apple, Microsoft, Amazon, Netflix, and Alphabet, which is of course Google. Now the interesting thing about Apple is that it broke a new record in 2019. It actually increased by more than $550 billion in terms of its market cap. Now that gain in market cap is astonishingly larger than the total market cap of every other stock in the S&P 500 outside of the top 5. So that just gives you some idea of how huge these stocks have become within the local context of the indices in which they are. So the other alarming thing about this is that the last time the top 5 were as big a percentage of the index was just before the bursting of the dot-com bubble. So I think it does raise some questions as to the sustainability of that and the risks to capital with regards to remaining invested. Over the last 4 years, the global fund is actually up more than 45% in cumulative terms in US dollars. Now that is actually just slightly behind the MSCI, which has performed spectacularly. It's up more than 50%. But if you consider that our global fund has had a big chunk of cash in it throughout that period of time and has no exposure to those big growth-oriented tech stocks, I think that gives you some indication of the unlock of value that has happened in other parts of the market outside of that one narrow area to which many funds have exposure. And I think that's really a strong advantage of having exposure to the RECM Global Fund in combination with perhaps some of the other investors or investment management firms that do have exposure to those tech stocks. So over the last 4 years, the Global Fund has held its own despite the fact that it's actually not participated in that story. So the fourth quarter saw the fund up 7.7% relative to the market, which was up 8.9%. And some of the contributors to that were our exposure to gold stocks. So you'll remember that we have a gold basket in place to protect against macroeconomic risk. And that was up quite strongly, as well as our exposure to platinum producer Impala Platinum. Now, Impala Platinum was up more than 50% during the fourth quarter. It's more than tripled during the course of 2019, and it's up more than 9 times from its lows in the middle of 2018. So it just goes to show that that sort of unlock of value can happen incredibly rapidly and incredibly sharply. And the fund did benefit from having some exposure to that. Some of the other areas of the market that performed very well in the fourth quarter were, as I mentioned previously, emerging markets. So we did have some exposure to, for instance, Russian stocks such as Sberbank, which were up quite strongly as a result of oil prices also benefiting and seeing a spin-over to those emerging markets which are tied to oil prices. Some of the areas of the market which were under pressure, which the fund had exposure to, were French car manufacturer Renault, technology company IBM, which of course isn't a growth-oriented company. The market's pretty much written that business off to a large extent, but they have made that acquisition of Red Hat. They're now trading at extraordinary low multiples, actually on a PE of 10. So we actually think there's a value opportunity there, but they did come under a bit of pressure during the fourth quarter. And the telecommunications sector. So we do have some exposure to the likes of Liberty Global, and telecommunications are tied to the economic cycle, and there are some concerns as to where the global global economic cycle is going. So that stock was also under a little bit of pressure during the quarter. But really, it was quite difficult to find areas of the market which were actually down. Most of the market was in strong positive territory across the globe. So one of the new stocks in the portfolio over the quarter was US retailer Kroger. You might recognize the name from your travels in the US. They are actually the largest grocery store or grocery chain in the US. That business has been under pressure because everyone assumes that Amazon is going to eat their lunch, but they actually have a combination of scale. They've actually got a very good digital footprint already, which they understand their customers very well. They've got an incredibly complex loyalty program and have a lot of data with regards to their customers. And they also have their own brand, which brings in cost efficiencies and very good locations of their stores. And that combination of sort of the digitalization of retail and good locations is very important because not everyone wants their groceries delivered home. In fact, there is an increasing prevalence of the click and collect sort of model. So their customers want the benefit of actually buying stuff online, but they want to be able to pick it up on the way home instead of having to be at home when, of course, the grocery store needs to deliver their groceries. So they've also bought a stake in the online business Ocado. So they are also moving into that online delivery space as well. And that combination, we think, and at the current prices, represents a value opportunity where they won't actually be taken out by Amazon completely. They actually are positioned well to go forward with that sort of digital revolution in retail. So the Global Fund is a very interesting fund. It's one that isn't exposed to the pullback in sort of these big growth tech stocks. It doesn't have any exposure to that part of the market, but it has still delivered incredibly good returns over the last 4 years despite that. We think that we've got a fantastic combination of undervalued stocks in various geographies, industries, sectors, in emerging markets, as well as some exposure to the UK. We've got our cash position exposed to both yen and the British pound, which performed well during the quarter. We think that the US dollar does remain vulnerable, so we want to take advantage of those undervalued currencies. And we think we've got a robust portfolio which will do very well if markets come under pressure, but which have substantial upside in terms of the value opportunities across the board, across geographies, and across the globe.